Hi, this is Krubakaran Rajendran. Welcome to Trading with Grow channel. Are you trading with cash markets and wanted to get started with futures market but do not know how to get started with it? Do not worry, this video is definitely going to help you out where I'm going to talk in depth about how to get started with futures trading. So first I'll explain what is futures trading and what is the difference between futures trading versus cash markets, and what are the different types of contracts that are available, like different expiry dates that are available with respect to weekly options versus futures, and what is the overall capital that is required to get started with futures market. So these are the things that we are going to address in this video. So people who wanted to trade with futures, there are ample of options available. First, you need to select the instruments that you wanted to trade. See, there are approximately 185 stocks that are available with respect to futures segment, and there are no even though 5 different indices available for futures like Sensex, Midcap Nifty, Fin Nifty, Bank Nifty and Nifty. Only 3 instruments are having higher liquidity in futures, which is Nifty, Bank Nifty and Fin Nifty. Only these 3 instruments have a higher liquidity. So when you trade with these 3 futures, the impact cost will be lesser. Similarly, with respect to stocks, even though you have 185 stocks which are part of FNO, not all the stocks are highly liquid. So there could be certain stocks which might not be liquid enough. So we need to avoid trading in any kind of stocks or any kind of instruments which is not liquid enough. If you wanted to know what are the list of stocks that are available for futures and options trading, you can go to this NSE FNO link, and once you scroll down there, you would be able to see a link to download the file. So once you download this file, you will be able to see what are the list of stocks and what is their respective lot size, overall symbol, and this is the overall lot size. So as you can clearly see, like ACC, this is ACC symbol, the stock's name will be there, the stock symbol will be there, and respective lot size. What is the lot size for each and every stocks? See, with respect to trading in cash markets, you can buy any number of shares in multiples of number 1, like 1 shares, 2 shares, 3 shares or 5 shares, 10 shares, 12, 13, any kind of number of shares that you can buy with respect to cash markets. But when you're dealing with futures market, it is considered to be in lot size. It has to be in multiples of lots. For an example, if you wanted to trade with Nifty futures, it will be in the multiples of lots, which is 1 lot is equal to 50 quantity. So you can buy 1 lot which is 50 quantity, and if you wanted to buy more than 1 lot, more than 50 quantity, you cannot buy 51 quantity, 52 quantity. It has to be 50, 100, 150, 200. So it has to be in multiples of 50. So any kind of stock futures or index futures which you trade, it should always be in the multiples of lot size. Say suppose if ACC is having a lot size of 300, then you can buy 1 lot which is 300 quantity. Next you can buy 2 lots which is 600 quantity. So likewise it keeps on increasing based on the multiples of lot size. So this you need to keep in mind when you're trading with futures. So consider this Nifty, which is trading around 21,000 now, and the lot size is 50. So if you multiply both this 21,000 into 50, the value is approximately around 10 lakhs 50,000. So, but in order to buy 50 shares of Nifty, you need to have 10 lakhs. That is the approximate value. But with futures trading, you don't need to deposit this 10 lakhs to buy 50 quantity. Instead, you just need to buy just 8 times of it. And for an example, the margin required approximately is 1.2 lakhs. Here's the here's the Nifty December futures chart currently, which is trading around 21,000. So if you see in Grow terminal, it shows the actual margin is approximately 1,20,000. So if you wanted to buy, so if you wanted to buy just 1 lot, you just need to have a margin of 1.2 lakhs, and with that you can easily buy 50 quantity. So now for an example, if LTP is changed from 21,000 to 21,100 or 21,200, consider this. So now what will be your profit? Your profit is this one minus this one, which is 200 points. So if you multiply that with the lot size, which is 10,000 rupees, so you are buying and selling and you are making 200 points difference of profits in Nifty. If you multiply that with the lot size, you are making 10,000 rupees. So this 10,000 rupees is made with a capital of 1.2 lakhs. So what is the overall returns that you could make is, this is the overall returns that you could make, which is approximately 8%. So what you have to do with respect to futures is, it gives you leverage where instead of putting 10 lakhs, you are just putting 1 lakh and making higher profits. Similarly, in case if market goes down, say suppose instead of 21,200, say suppose it is 20,800, where you have lost 200 points, then in that case you are losing 10,000 rupees overall loss. So this 10,000 rupees is approximately 8% loss. So futures can give you higher profits when you are right, and also can give you a higher loss when you are wrong. And most of the people confuse between this weekly options and futures. See, weekly options where with respect to these indices, Sensex, Nifty, Bank Nifty, Fin Nifty, Midcap Nifty, these five instruments will have weekly options where every week the contract expires. But with respect to stocks options, there is no weekly options available, only monthly contracts is available. With respect to futures, it is the same thing where you have only monthly contracts, there are no weekly contracts. And these monthly contracts are segregated into three nearby terms. Like if this is December, then December contract will be there, January will be there, and February will be there. So three different contracts will be there, and higher liquidity will always be on the contract which is nearer to the current expiry. So December will have a higher liquidity compared to January and February. So if you want to trade futures and options, specifically with futures, you can just go to Grow Terminal and click on futures and options. Once you scroll down, you will be able to see the top traded index futures, where Bank Nifty futures and Nifty futures are having higher liquidity. So if you wanted to trade with Nifty futures, you can directly click on Nifty futures, and if in case you wanted to make it as a intraday orders, then you can click on intraday and place a buy order. In case if you wanted to buy it on a positional basis, you can click on delivery and click on buy, where if you have this margin of 1.2 lakhs approximately, the order would be executed in your account. So as I mentioned earlier, like in case if the Nifty futures increases up, then you end up making higher profits. In case if it goes down, you might end up making higher losses. So always consider what is the leverage that you're going to take, so that you don't end up making higher losses when trade goes against you. Now let's focus on charges. Like if you see the brokerage calculator for futures and options, I have mentioned one lot which is 50 quantity. Say I have mentioned 21,000 as the buy price and 21,200. Say suppose we are selling it for a 200 points of overall profits. Then 200 into 50, which is approximately you make 10,000 rupees of overall PN, overall profit. Out of this 10,000, this is the overall charges you end up making payment to the broker, where 40 rupees goes to brokerage, which is normal 20 rupees plus 20 rupees. But there are other charges which we need to pay to the government. For an example, securities transaction cost. That itself has no considerable amount of money, which is 133 rupees goes for that. And then next, exchange charges, SEBI, GST, stamp duty, etc. Basically, futures will have comparatively higher STT, securities transaction charges. But with respect to options, say suppose if I select options here, and if I am buying 100 rupees and then selling it at 300 rupees, same 200 points I'm making profit, same 10,000, but the charges is very less. See, the charges is only 68 rupees. Whereas with respect to futures, we ended up paying almost 250 rupees. So because the main charges with respect to STT, here it is only 9 rupees when you trade with options. But with futures, it is comparatively much higher. So that is why liquidity is comparatively lower in future segment, but much higher in option segment. Let's take this example how futures can be really beneficial when you get the trade right. So this is GMR Infra, where the GMR Infra future stock, where the price is approximately around 69 rupees. And the lot size is 11,250. And the approximate margin that is required is around 1.6 lakhs. So now let's see, in case if you have bought this particular GMR Infra stock futures yesterday, where now it has gone up 11%, which is 7 rupees profit. So yesterday it was trading around 62 rupees. So yes, in case if you have bought yesterday, let us see what would be the overall profits you would have made with this trade. So we are entering all the values now. So if you go and check this Excel, where I've entered GMR Infra, 62 rupees is the LTP, and the lot size is 11,250. Overall value is approximately 7 lakhs, and the margin required to buy this much number of quantity is only 1.5 lakhs. So you just deposit 1.5 lakhs, where you can buy almost 11,250 quantity. So yesterday if you bought at 62 rupees, currently it is trading around 69 rupees. So your overall profit is 78,750 rupees. So that is almost 50% of your overall capital, where you have put 1.5 lakhs and you ended up making almost 78,000. So this is why lot many people are attracted to futures trading, where if you are able to get the direction right like this, where if you are really good with your analysis with respect to any stocks, people can use futures in their own use and make much higher returns compared to cash segment. So make sure that if you are really good with your analysis and if you are really able to handle any kind of higher risk, you can definitely go for future segment and make such kind of higher returns. So this is what I wanted to convey with respect to this video, where the complete futures part is explained. So I hope you found this video really helpful. So next time when you are trading with cash markets, try considering trading with futures market, but make sure that you are trading with a capital that you can afford to lose, because futures is a double-edged sword, where when things are going in your favor it can give you higher returns, but when the things are not going in your favor it can give you higher losses also. So make sure you don't increase your overall leverage and take higher risk when you're trading with future segment. So this is what I wanted to convey. Thanks for your time. I'll see you guys next week with another video. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.